reversal to the downtrend or bearish reversal. Okay, so this is also a formation of a what? Of a rising wedge. So at this time we are in the downtrend because we've been moving from this area, making a lower low, lower high, lower low, lower high, and lower low, and starting consolidation from this area by forming a rising wedge. So when you see this rising wedge, welcome to the trading focus once again. Hope everyone is doing good, guys. So guys, in our previous videos, lesson 18, we started from by studying the chart patterns that we use in the market to make money. After lesson 18, continue with the lesson 19, where lesson 18 we talked about the double bottoms and double tops. The lesson 19, we talked about the head and shoulders. How can you use head and shoulders? If you didn't watch those two videos or how to use the chart patterns, you can go back and watch them. They are really good to help you to help you in your journey of making money in the market. So today's video, we're going to be continuing with the chart patterns. This is my favorite one of the chart patterns that I really like to use in the market. Those chart patterns are wedges. So the using of wedges in the market is the good way to make money in the trend continuation, even in the reversal market. So we are going to be looking at how can we identify between a reversal or a continuation wedge and how wedges are formed, how to enter in any financial market by using wedges, and where to set a stop loss and where the target will be when you are focusing on using those wedges. Okay, so guys, uyu munsi tugiye kugaruka kuri chart patterns za wedges kugira ngo tube twabasha gukorera amafaranga mu isoko dukoresheje izo chart patterns mu buryo bwa trend continuation mu gihe isoko rikomeza cyangwa se mu gihe isoko rigiye guhindura icyerekezo. So guys, remember to subscribe, like the video, share to our friends. Let's take this channel to 100k. This is your channel. This is your family. Stay here. We'll be back in the minutes on our lesson 20. Okay, welcome back again to our lesson 20. How to trade a wedge chart pattern. Okay, so in the wedge chart pattern, two trend lines converge or connect. So that's where you have two parallel lines and they end up connect from this area or converge from this area like this. So that signals that the market pause in the current trend. The market was moving, which means that the traders are still deciding where to take the pair next. The traders are still deciding the next movement of the market. Nukubango igisoko rya posing tuba turi muri consolidation, we are waiting for the breakout kugira ngo tuze kureba are we breaking out from outside or from downside. Okay, nukubango tura breaking ira haruguru cyangwa se tura breaking ira hasi. So wedges can serve as either continuation or a reversal. So wedges we can use them by entering in the market in the trend continuation or in a reversal of the market. Nukuvuga ngo twazikoresha mu komeza ku isoko riri muri trend runaka rikomerezamo tukinjiramwo hagati cyangwa se mu kimwe isoko rigiye guhindura icyerekezo. Okay, so we have two types of wedges. Okay, we have a rising wedge and we have a falling wedge. Okay, we are going to look on all of them one by one. Okay, so as we continue, let's start from rising wedge. Okay, the two types of wedges, falling kumwe na rising. A rising wedge is formed when the price consolidates. Remember, when we are talking about the chart patterns, means that the market is moving, and if the market is moving like we are moving up, when we start forming some kind of chart pattern, means that we are consolidating. Okay, whatever kind of the chart pattern means that at that time the market paused or the market is taking some rest to even continue in the same direction or to change the direction. So at this time we are going to be consolidating between support and resistance lines. If you remember about the trend lines, we have two trend lines. the trend lines that show us the areas of support and the trend lines that show us the areas of resistances. Okay, when a rising wedge is formed, pay attention on this. When a rising wedge is formed, your rising wedge you form is in an uptrend. In an uptrend, okay, it's usually a bearish reversal. Do you understand that? Okay, let's take a look on an example from here. Okay, now you can see from this example. So, if the market is moving up and a rising wedge will appear, at that time we are expecting a reversal to the downside. Okay, you can see there. The market is moving up like this, making a high, higher low, higher high, higher low, higher high. We start consolidating from this area and we end up breaking below this area and change the direction to the downside. Remember in our previous videos, all of these areas we are rejecting from, those are resistance areas. Those are supply area zones. Okay, so as long as we are rejecting from this area, we are expecting the market to change the direction to the downtrend. So then when you see a rising wedge forming in the uptrend, when we are in the uptrend, that means that we are going to change the direction to the downtrend. Remember, a rising wedge is a bearish signal. That's why we are not going to be expecting the continuation to the upside. When you see a rising wedge, you are expecting the market to go bearish, okay? To go bearish. Whenever it's in the downtrend, whenever we are in the uptrend, at that time, when you see a rising wedge, means that you are expecting the market to give you a direction of the downside or to give you a signal to enter for sell. Okay, nukuvuga ngo niba ubonye rising wedge iri muri uptrend, icyo gihe tuza expecting iki? Tuzavuga ko tugiye kujya muri sell, taking a sell. Niba tubonye rising wedge, nanone muri mind yacu tugomba kipingamo yuko isoko icyo gihe uko byagenda kose tugomba kwinjira dukora sell, which means the rising wedge is a sell signal. Okay, let's go back to our notes and then explain everything. So I think you understand this one. You see a rising wedge in an uptrend, you are expecting the market to change the direction to the downtrend. On the other hand, if it forms in the downtrend, that means a downtrend what? A downtrend continuation. When the market is moving uptrend and you see a wedge forming here, a rising wedge forming from uptrend, we are expecting the market to change the direction. If you see a rising wedge forming in the downtrend, means that we are going to continue in the same direction. Tugiye gukomeza muri cya cyerekezo n'undi twari turimo. Niba tuyibonye hehe? Muri downtrend. Okay, let's go back also and check an example on the continuation. Okay, so let's go back and take a look on that example. Okay, I think you see where this market. So now we are discussing about a rising wedge. This is a rising wedge. As we explained before, when the market is moving up and a rising wedge will appear from this area, we're expecting the reversal to the downtrend or bearish reversal. Okay, so this is also a formation of a what? Of a rising wedge. So at this time we are in the downtrend, because we've been moving from this area, making a lower low, lower high, lower low, lower high, and lower low, and starting consolidation from this area by forming a rising wedge. So when you see this rising wedge in the downtrend, means that we are going to be continuing to sell, or it's going to signal that the market is going to continue in the same direction. Which direction is a bearish direction or downtrend. Okay, so nukuvuga ngo niba tuyibonyemo irimo hano hagati, iri muri trend ikomeza, nukuvuga ngo muri bearish tuza expectinga n'undi yuko turi bukora iki? Turi taking a sell. Okay, so coming back from here, so an example of a rising wedge from this area. So as you can see that the market was moving up as we are making faster higher lows. You see from this area, higher lows are more than higher highs, but as we're forming higher highs and higher lows, This line this is a support trend line, and this is a resistance trend line. This support trend line is steeper than the resistance trend line. So at that time, we end up forming a what? A wedge, a rising wedge. As we form a rising wedge, at that point, what are we going to be expecting? We are going to be expecting the market to break below a support trend line, break out from the formation of a rising wedge, and at that time we enter from there and we take a sell by expecting the market to change the direction to the downside, okay, or to go bearish. So that's where a signal of a rising wedge in the uptrend, we are going to take a trade. Okay, let's also read from here. The price movement after a breakout is the same size as the height of the what? Of the wedge. If we are going to take a trade, remember in our previous videos of head and shoulders and inverse head and shoulder, double tops and double bottoms, I was talking about the areas where we break out by taking a trade, moving for a short time as you are waiting for a pullback or a retest to the previous high or low, whatever the direction you are in. At that point, you need to trade the breakout by keeping in mind that anytime the market can pull back, like the market can pull back from that area to come and retest from where you started breaking from by the trend formation. Okay, so here, if you see the formation of a rising wedge and the breakout, that's where we are going to catch the move. The target will be the same size as the formation of a wedge. Okay, you can see from this area. This area, this is where we started forming the what? The wedge. And we enter from this area, and this one will be equal to this one. You take a trade from this area, catching some pips in this distance, and then after that, you wait for the pullback, and keep this in mind also. As you are pulling back, you have to view the market carefully. If the market moves pulling back like this, let me show you. Remember, this is a combination of tools that we are looking for to get more facts that are going to give us the direction of the market. Okay, look at here. As you are forming a high highs and high lows, like this one, after breaking out, you do like this. This is a formation of a head and shoulders. If someone missed from this area, as the market pulling back, you're gonna find yourself in the position of opportunity to go for sale by using a head and shoulders. If you remember well how we explained the head and shoulders and inverse head and shoulders, okay, you have more opportunities to take a sell from this area by expecting the market to reverse or to start a new movement to the downside. Okay, so keep that in mind. So the target will be the formation of a rising wedge, and the stop loss will be above the what? Will be above the formation of a rising wedge. Okay, so let's take us an example from there, and we see how we're gonna set an entry and where we're gonna be setting a stop loss. Okay, so taking a look from this area, as you break out, you're gonna enter from here, and the stop loss have to be above the previous high, which is the formation of or the rejection from resistance. That's where you are going to be setting a stop loss. The reason of setting a stop loss there, I explained in our previous videos, is that you are expecting the market to move down. If the market breaks above this area, at that time, you'll be expecting the market to continue in the upside. So after the confirmation of our wedge, we are going to enter from here. As you break out, you are your first target will be equal the same size as the formation of what? The same size as the formation of the wedge. As you pull back, like how I drew from here, as you got an opportunity to pull back, that is your opportunity to continue to the downside, starting a new trend. If you see this well, will be like a head and shoulder, and then you go downside. Okay, that's how you enter, and that's where you set a stop loss, an entry, and the target. So as the market start making a lower lows and lower highs, that's where you're gonna be confident to continue downside. Okay, as a trend continuation, the formation of a wedge also formed here in the downtrend, which will mean that we are going to be continuing to the downside. So you enter after the breakout below the support trend line, and the stop loss will be above the what? Will be above the formation of the rising wedge. At that time also, you can check from this area, this is a low, which is a support, and this support, as we are forming this consolidation, we end up retesting from this area and we enter in the resistance areas. As we are entering from resistance areas, we are expecting the market to continue in the selling direction. Okay, so let's keep moving to our notes, and we explain more and get information of how can we use the wedges to enter the market and make money. Okay, so this is an example at this time, a rising wedge formation, which act as a bearish continuation. I also explained from there in our example, but also let's take a look here. Okay, so here the price, as you can see, this is a formation of a rising wedge. So the price is from here, the price is from a downtrend, before consolidating and forming a higher highs, as you can see here, starting from higher highs, hello, higher highs, higher highs. Okay, so we end up waiting for the breakout to break out from the down area. Okay, so now we got a breakout from this area. If you are trading pairs like GBP USD, Euro USD, sometimes gold, those are my favorite pair to use these chart patterns, especially pound USD, GBP USD. Okay, so as you break down from this area, you're expecting the trend to continue downside. Okay, so the price broke to the downside and the downtrend continued. That's why we call it a continuation signal. Okay, so keep this in mind. A rising wedge is formed after an uptrend, usually leads to the bearish reversal. Ukuvuga ngo a rising wedge yifominza muri uptrend cyangwa se igisoko ryazamukaga, icyo gihe tuzi expecting ko isoko rigiye guhindura icyerekezo rijya downside. And also when a rising wedge is formed in the downtrend, we are expecting the downtrend what? A downtrend continuation. And remember this, if you see a formation of a rising wedge every day, every moment, expect selling signal. Okay, nukwanga igihe cyose tubonye rising wedge to expecting iki yuko tugiye guselling. Okay, but you have to follow the rules of the formation of the rising wedge and even an entry. You see from this area, so you see from this area, this is DXY. We are still having it like this. So okay, this example is on DXY. The market was moving down by making what? By creating a rising wedge in the downtrend. So as we are forming a wedge, we enter from this area. When we break out, the stop loss is above here, we continue. As we form another one, we are expecting to do what? Breaking below this area, our stop loss above the formation of the what? the formation of a wedge, and then you are expecting the downtrend continuation. Okay, very easy. That's how we use it. So nukuvuga ngo niba tuyibonye muri trend continuation nko twari turimo kubona muri rugero, tuhita twinjira dukora iki, taking a sell. Okay, after a rising wedge, let us explain also a falling wedge. A falling wedge, just like a rising wedge, a falling wedge can either serve as what? As a reversal or a continuation. Can be a reversal or a continuation. It all depends on how we are going to explain it. As a reversal signal, nukuvuga ngo falling wedge ishobora kuba reversal cyangwa ikaba continuation. Okay, so as a reversal signal now, let's start from there. It is formed at the bottom of the downtrend, indicating that an uptrend would come next, by indicating that the market is going to change the direction and start a new direction, which is a bullish direction or an uptrend direction. Okay, let's take also a look on examples. Okay, you can see from this example, this is a falling wedge. As we are moving down, we reach in this area and we start rejecting from there by forming this amazing falling wedge, so that we are gonna be expecting or indicating that changing the direction to the upside. Okay, remember in our previous videos when we've been discussing about areas of rejection, support and resistance, areas of supply and demand, the market repeat itself. The areas you are rejecting from, you have to make sure those areas are stronger. What is the sign of those areas being stronger? The area or a zone be stronger when the market rejected from there multiple times. We rejected from this area, but also before, that's where we rejected from to start a new trend, to start moving up. If we got this move, and this is the same move we are gonna be expecting from this area, and the chance is that we got a chart pattern which is a what? Is a falling wedge that signal that the trend is going to change. We are going for bullish. Okay, so that's how we go ahead and take a trade from this area where we break out from the what? From the formation of a falling wedge. The stop loss will be below this strong zone where we rejected from, or below the formation of what? Below the formation of a falling wedge. Keep those tips in your mind. I explain all things by not skipping anything, by adding all the different tools that we talked about in our previous videos. I'm not just explaining a rising wedge, you enter from here. No, you have to enter from the area which is stronger. And if you didn't watch our previous videos, go start from there and you're gonna get more information about the areas of rejection, how can we reverse from this area, the facts that we're gonna be looking for. All of those subjects are there. Okay, let's keep moving on. So, as a continuation, it is formed during the uptrend, implying that an uptrend or an upward price action would resume. Okay, if we see a falling wedge in the direction of an uptrend or an uptrend trend, means that we are going to be continue in the same direction. Okay, and remember and keep in your mind that a falling wedge is indicating or signals the bullish. Okay, so now let's take a look on different examples. This is a falling wedge, as we've been talking about from there. When we break out, we expecting to take a trade from here. And remember, our target will be our first target. Let me talk about this. Our first target, as explained in our rising wedge, our first target when we break out will be the same size as the formation of what? The formation of a wedge. As you are waiting for the pullback, starting a new higher highs and higher lows, you have to make sure that you are not going to hold for longer. Just take or secure some profits and then you let the runner run. If the market doesn't pull back, it will be your opportunity. And even if the market pulls back and start making a high highs and high low, your stop loss will be here. You will be safe by taking a big profit from the direction of uptrend. Okay, so you see from here, I also explain this from our examples. After we broke above from this area on the top, we got a nice move upwards. That's equal the height of the falling wedge formation. Let's also take an example or look on the continuation falling wedge. Okay, this is a wedge. If you see a falling wedge, every time expect the market to go bullish. Keep that in your mind. Here, the price consolidate. Remember, as we are in the formation of the chart pattern, any chart pattern means that the price is consolidating. So for a bit, after a stronger rally, after a stronger movement, we started to do what? To form a falling wedge. Okay, so this could mean that the buyers simply paused to catch an energy to move even higher. Remember, as the buyers are taking some rest from this area, they got a break, they are consolidating. And then after that, we are expecting the market to continue in the same direction, which is the uptrend. Okay, you can see that from this area, this is a falling wedge. As the market reaches here, we start consolidating by creating a falling wedge, and after that, we break out, we enter from this area. The stop loss will be below the low of the wedge, or the formation of the falling wedge, and our first target will be equal to the formation of what? To the formation of a falling wedge. Okay, same as here, the market was moving up, high highs and higher lows. We start making a consolidation from this area, and then we end up with the formation of a falling wedge. Then after breaking out, we continue in the same direction. Okay, you can see as we create a falling wedge, we continue in the same direction. Okay, as simple as that. Okay, after breaking out from this area, you end up taking a trade from this area. Your target will be equal, the same size as the formation of a falling wedge, and then you take your profit. If you want to hold for long, just secure some profit and let the runner run, and you can lock some as you start making a higher highs and higher lows. Okay, so that's how we use a falling wedge and a rising wedge. Keep in your mind, a rising wedge means bearish, a falling wedge means bullish. Okay, keep that in your mind. Okay, guys, thank you so much for your time. Remember to subscribe on the channel. This channel is yours. This channel is for everyone who want to take an education and start making money in the market, any financial market. Okay, ku bantu bumva ikinyarwanda murabizi ko crypto zatangira 2026. Today niba urimo kwiga forex, birakorohera cyane kuvuga ngo niba turimo kwiga forex ni kimwe na crypto. Nta namwe bitandukanye uretse ko ziri crypto hangayenga ari forex. Kuvuga ngo niba wiga forex byose bijyaniye hamwe. Okay guys, again thank you so much for your time. Until next time, take care and be safe. Ciao.